Hello and welcome to Big Deal. I am Nisha Poddar. Now remember that alternative investment funds or AIFs embarked on an important journey this year of converting its units into Demat form as mandated by market regulator SEBI. Now the timeline for the first stage of dematerializing AIF got over in October and has got the success of 99% adherence. Let's discuss the path-breaking milestone in the AIF industry with experts to understand the process, regulations, and above all, the impact of this on the up-and-coming AIF industry. With Siddharth Pai, Rajeev, Saptarshi, and Ashish Fafadia. Thank you so much, gentlemen, for joining us right here on CNBC TV 18. Now, Rajeev, my first question, do you think that this mandate coming from SEBI and the AIF industry really applauded it, and was it the need of the hour?
For the long-term growth of the AIF industry, the answer is a clear yes. Given the benefits that public market investors have got through Demat, given increased transparency, accuracy, sophistication that typically investors look for, the answer is a definite yes. Also, if you see the rapid increase in the AIF AUM, plus the increase in number of investors investing in AIFs currently, I think time was ripe enough for Demat to happen in any case. It was just something that was in the waiting. We couldn't have really postponed it for long. There are also benefits to the regulator in terms of ease of monitoring, easy access to information, because it's very easy for them to get all the information that is required from depositories. Plus, investor protection can be guaranteed through effectively lower operational and fraud risk. So I think the long and short of your question is yes, it was definitely a need of the hour. And that's what I think SEBI has done.
Right, and SEBI has been ahead of many other market regulators across the world. We are probably one of the first few countries probably to look at mandating AIFs. So Siddharth Pai, tell us about the SEBI's thinking. You from IVCA have been in touch with them in incorporating this. What has been the thought process and what has been the success rate?
No, I think so. This is first off a very novel initiative that SEBI has actually taken up so far. We are, after all, alternative in name as well as in operations. It's not a very standardized product. It's actually driven primarily by the contract that you have. So we, through IVCA, the Private Equity Venture Capital CFO Association, worked with the depositories, worked with SEBI, etc., to make sure that the depositories are well aware of what dematting actually entails, what are the unique operating models and modalities offered to the AIFs for that matter, to make sure they end up actually creating a set of frameworks that truly reflects it. They actually went through several iterations, I think 3 or 4 iterations before we ended up coming up across a format that did actually correspond with AIF operations also. SEBI must be lauded for the amount of effort they actually put in. SEBI was instrumental in creating the working groups, getting all the people together, making sure that everyone actually does it. And we've actually achieved 99% coverage as of now. 99% of all AIFs above 500 crores have actually gotten their ISIN right now and have actually dematerialized their units. We're now in the process of actually creating those units to the investors stage, to the investors' Demat accounts also as we speak. Out of 301 AIFs, I think only 2 of them haven't actually gotten their Demat done as of the cutoff date of 31st October. So for an alternative industry, for something that's been fairly new and novel to come about, and their rules had to be rewritten, this is truly a great success case. That actually speaks about how SEBI as a regulator works very closely with industry, how industry works with market intermediaries as well to create a global optimum outcome that does actually benefit not just investors, but also the AIF as well as they end up actually scaling up.
Right. And Ashish, joining in this discussion from the venture capital side, you are in touch with several LPs, several foreign investors. How has this move been taken by that community and what is the impact on that?
So, Nisha, this is something that you can understand by breaking this into 3 parts. Part 1 is investors who are looking at coming from overseas, and then there are investors looking at from India. So far as the Indian investors are concerned, I think this is something which is perfectly in line. Most investors do have a very diversified portfolio, where they would have assets allocated in stock markets in general. It's only thereafter that they would start looking at private investments and AIFs, etc. So that side is not something which is a challenge at all. investors that are looking at investing into Indian AIFs from overseas, there would be some degree of challenges and back and forth. But broadly, given that this is a step in the right direction, people to understand where this is coming from, and it overall has a benefit and correlation to the finesse with which the system can operate. So I think it has been received pretty well. We have not seen people push back and say that we are not going to support you. There are teething troubles that we have gone through, and we might have a few things as everybody completes their first cycle over the next 3, 6, 12 months. But broadly, well received. The industry has grown leaps and bounds, and anything that the regulator does in order to bolster the confidence has always two sides of it. The smaller side is that it does create a little bit of a overhaul and extra burden for compliance costs, fees, etc. But in general, this is a step in the right direction. So every participant, whether it is the fund manager or the investor, will accept it willingly and start seeing the benefits in the short term, forget long term.
Right. So it has been applauded by the industry, but you also mentioned the compliance burden. So Rajeev, while we are trying to do ease of investing in India, we are trying to attract investments into India, and compliance burden should be anything but lowered. Do you think that this has taken more of a burden for some of the foreign investors? How feasible is this process, and how adept are we to really meet all the deadlines that have been stipulated? We just crossed one phase.
No, I don't think. See, other than, we do have a lot of large LPs in our funds. Other than queries on processes, a few odd questions here and there, I don't think foreign LPs had, in principle, any large issues in terms of providing Demat details or even opening up DP accounts. Yes, it did take some time for them to really understand, possibly for LPs who did not have a DP account, had to go through the painful process of opening a DP account only for AIF investments. But I think they have ultimately accepted the fact that this is a new dawn, and the advantages of having their investments in an electronic form obviously is something that they have fully accepted. So I don't think that there have been any issues as far as we are concerned in getting our offshore LPs to get onboarded on this particular exercise.
So Rajeev, I want to understand that yes, shares have been dematerialized, but now AIFs have been dematerialized. Why not mutual funds? What's the difference?
So that's a question best answered by the regulator. But the way I think about this is, given the fact that AIF as compared to mutual fund is relatively very small, the investor base is concentrated in almost large cities. It would be far easier and quicker for SEBI to have implemented this for AIFs first. Mutual funds, as you're aware, is scattered across the country. Too many small investors, mutual fund industry is too large. So I think, in my view, they've kind of started off with AIFs first. Also, please understand that as far as AIFs are concerned, we are having a very rapid growth in terms of assets under management as well as number of investors. So I think at some stage, Demat for AIFs had become something which was an urgent need of the hour, as I said in the first question. So I think this is something that is my belief. Of course, the regulator may have a different view on this.
Yes.
But you also need to look at the fact that, end of the day, SEBI seems to be looking at making both the liability side and the asset side of the AIF work in an electronic format. If you see the recent proposal to have even the investments of AIFs to be done in Demat form only, I think this is a very good move overall for the AIF industry in general.
Right. And Siddharth, what do you think about the next steps? We just finished one phase. How do you see the process going? And the industry, is it prepared? Because right now we are dealing with only larger AIFs above 500 crores corpus. Now the smaller ones, are they like geared up for this? And are the processes in place?
I think the processes are in place as of now, because what applies to a large AIF also similarly applies to a small AIF as well. And I don't believe there are any unknown questions as of now in the entire process, given the 99% success rate that the industry is seen as of now. So, but that being said, what all of us are doing as an industry body, along with IBCA, CFO Association, and the depository, etc., we've already started knowledge sessions with the remaining AIFs, so yes, to actually demat their accounts, demat their units as of date. We're already looking at knowledge sessions, we're looking at town halls, we're looking at working papers to come up, we're looking at playbooks looking to create playbooks that helps them to actually end up adhering and actually complying with the regulations that have actually come into force as of now. So it's actually an entire industry effort. For that matter, all of us are actually working together to ensure that this particular thing does actually become a success. And this initiative, I do believe this success initiative can actually set up a template, not just for the dematerialization of all sorts of financial securities and financial assets within the company, within the entire country itself, as we go forward.
Definitely a path-breaking move. Ashish, Fafadia, versus other global economies, how is India now placed in this particular bid? Give us a sense of how many countries are really following this.
I've said this before on television and quoted it as well. When it comes to regulations around financial markets and capital markets, I think we hands down would count in the top 5 easily. On some of these measures that SEBI has taken, specifically coming to the question you meant to ask, I think I don't know how many countries worldwide do have some of these systems and processes that we are starting to institutionalize. And once in a while, you will hear somebody ask a question that is a necessity. But once they start operating with some of these things, they see the benefit of it. So I think overall, it does put us into we have consistently been in the top decile when it comes to some of these stipulations. And we are moving in the right direction. From a confidence building measure, as the growth spurts happen, we are in a position to take care of these things. Let's also not forget that as things move forward, it also opens up possibilities for better products to be launched, whether it's a listed fund or evergreen funds, etc. Those are now opportunities that are there under the law. It has been there for a while. But you can start leveraging them because the regulatory environment is that much more clearer and the enabling frameworks have been laid out.
All right, Ashish, you made some very important points and about the path after, the dematerializing of AIFs. So industry still has a long way to go in completing this process and full adherence to SEBI's mandate of dematting AIFs. But what could it lead to and what could be the impact going forward? We'll discuss all that and more with our panel of experts right after this short break on Big Deal. Stay tuned.